Let's start by putting the focus on Bank of Baroda. A surprise loss is what we saw coming in the fourth quarter, 991 crore rupees. Nonetheless, narrowing that loss on a year-on-year basis. Asset quality has improved sharply for the bank. We caught up with PS Jayakumar, MD and CEO at Bank of Baroda, talking to us about their earnings and what he expects as far as the bottom line goes in the coming quarters. Listen in.
The results, if you look at the operating side of the results, they seem to be pretty decent in the sense that our balance sheets have grown quite well, on an average 18.75% on an earning average basis. Our net interest income has gone up by about 25%, which means that our margins have improved. In fact, they've gone up by 35 basis points. Notwithstanding the fact that this year we didn't have the same kind of revenues as we had in the treasury as we did in the last year because of the way interest rate cycle moved. Still, we had a improvement in the operating profit by about 13%. And the consolidated operating profit we measure, because that's important, because that basically gives us the organic capital to pay for losses, and then the residual taxes was around 15,500. So in many ways, the operating results are pretty good. It's consistent growth quarter after quarter across. What was a bit of a negative aspect of this quarter was partly accounting, in that we expected certain accounts in respect of which the sale price of the assets and the buyers are all being crystallized, had to be moved, had to be fully provided, because the transaction by themselves could not get consummated this quarter on account of the process relating to the execution of the IBC, basically on account of the IBC process. So it really resulted in us having to take a large sluice of provision of 1,000 crores nearly, which if had not been taken, we wouldn't be in a loss, but probably in a break-even situation. The other aspect is we took a fair amount of provision with respect to certain telecom assets. Because not in an accounting sense, we could have taken the losses over a longer period of time by following the rules of accounting, but really there was a degradation in the realizable value of the asset, and we thought it is appropriate to take those provisions. So there was a bit of a bunching up of provision of nearly close to about 2,000 crores between all these items. So the profitability was affected on account of these reasons. The 2,000 crores of additional provision we took, plus 1,000 crores of provision we took on accounting related issues. Sans that, it would have been a good story from a profitability perspective. But at the end of the day, we are dealing with embedded losses. The net NPA number, which we started at 5.42 in the beginning of the year, is down to some 3.3. Extrapolating the number, we should be close to 2.5% as we conclude the following financial year. So overall, yes, there are a lot of positive things. The integration has also been so far smooth. It's also taken a lot of time and energy on everybody's side. So I think, yes, there's been a bit of a disappointment with respect to certain provision taken, but it's after all provisions only, and we have a chance of recouping that.
Can we say that this is the provision that you have done is quite the last cleanup drive there, or you would have to take a major section going ahead in few quarters ahead?
So here is where it is. All the large accounts are identified at this point of time. There isn't much left over here. I think there are certain accounts in respect of which we would need to take additional provision, as for example our exposure with the ILFS to the financial service industry. On the other hand, there is visibility for a lot of recovery items as well. So in summary, when we put both of these two things together, we are looking at the net NPA number, rather credit cost, which is provisions we are going to take in relation to the average earning asset, to be closer to 1% than the 2.5, 2.6 is currently at. And so if you were to take that interpretation, then I do think the profits are going to normalize to what it has been during the good years.
So in case for ILFS, as you specified, you have not taken it into consideration this time?
No, I'm not saying we're not taking it into account, but this kind of degradation we had to take on the telecom asset could very well apply to the exposure that we have to the financial sector company. There are two types of exposures we have. One with respect to the lending to the various SPVs we have done. There is secured creditors, notwithstanding with the red or yellow, our position is fairly well secured. But the exposure to the holdco, the exposure to the ITNL company, and the exposure to the finance company, the situation, the recoverability items are likely to be much less than what the current provisions that we carry them in the books for.
So in terms of recovery and write back, if I want to understand, since you have made provision in various sectors, telecom being one, how much of recovery through NCLT cases where you might have done the provisioning do you expect going in the future quarters, because some major accounts are still hanging in litigation, and how much do you see as coming as a write back even though you have made a major cleanup in this quarter?
See, the provision coverage ratio overall has considerably increased.
Yes.
We do it at two levels. We do one at a gross level where we include the fully provided accounts. That number is trending towards 80%, which is quite nice. And if you were to take out those accounts which are fully provided and say, we're not likely to recover much from them and look at the balance, that number is around 68%. Okay. The truth is somewhere in between 68% and 80%. It's probably 71 or 72. So if you were to take that data, the amount of, there is, even assuming there is delay and everything else, the provision coverage ratios are itself considerably high to deal with those issues. But in theory, if an account doesn't get resolved, although it may be in the IBC, although you may have assets to back it up and it crosses a certain time period, then it has to be provided for by 100%. And so that remains. So overall, what I'm saying is the coverage ratios are decent. The net NPA numbers in absolute terms is as the lowest point we have had. The growth numbers are there. Balance sheet is growing well. All the big accounts, known issues are on the table. And so we are seeing a return to normality with respect to credit costs going into future.
So when we come into IBC for that matter, how do you look at this IBC as a medium to get your assets resolved? Do you look at it, we want your view on this whole mechanism, because a lot of questions have been raised by banks on the litigation time now stalling the entire process. It's a new effort, rather new policy or reform to say come in. So
actually, for any lending scenario, the resolution to courts or any other form of aspects is a last resort. You try to address the issue through a variety of mechanism, finding out some way in which the account can be managed, or some form of a curing policy, if you will, which will enable the customer to recover. So that really is always a preferred option. It's connected to the resolution process. It's also connected to the industrial activity, jobs, etc., etc. So IBC is a kind of an item that is it's one of the last resort items, we might say. Now, if you were to take a little bit more, shall I say, an accommodating view, then we have been through a lot of litigations. Each one of these, when they get settled, create a precedent. And to that extent, it strengthens the subsequent course of action with respect to IBC. So I do think that the IBC process will get better from where we are here today as we all go through the learning cycle, the precedents and law, the interpretation is done. But one thing is clear, the very fact that a borrower could lose the asset does have a positive effect in terms of the behavior. So I do think as we go into the next year, we expect and hope that the IBC process would work faster.
Last view coming in from PS Jayakumar. We've definitely seen that last-ditch effort really to improve the kind of asset quality that we're looking at. A big push on the provisioning side of things, and that's what's impacted the bottom line. It's a 991 crore figure that's come in as a loss in the fourth quarter. It's a surprise loss. We were factoring in, a profitable number. But that said, it has definitely narrowed on a YOY basis. It was a 3,000 plus crore loss that we were looking at in the same quarter last year. Net NPA is at possibly the lowest level that we've seen in several quarters. It's a 3.33% number. Q on Q also sequentially it's come down from above 4%, and GNPA stand at 9.61%. The PCR, the provision coverage ratio, is really where we've seen the big push coming in, and domestic NIMs just under 3%, 2.98% is what we're seeing as far as Bank of Baroda is concerned. But let's put the focus then on the Reserve Bank of India's